All right, come on in. We're sending out the invite as usual. Oh yeah, come on in. Copy that link. All right, if you're on the replay, you could fast forward through the pleasantries here. We're just waiting for the live studio audience to come in as it usually does over the next minute or so. I'm running a little bit late today in terms of getting that invite out, so bear with me for a sec while I get that shared out. Boom. Send. Okay. Hopefully that takes care of that. Hopefully you veterans take care of the rest. You guys know the drill. Hashtag team. Get the word out. All right. Let's see. Please share. Hashtag team. And we get going. For those who don't know, I am a 30-year veteran of Wall Street stock analysis and picking. I worked for some of the largest technology consultancies on the planet and was in charge of providing that information to Wall Street firms owned by guys like Jim Cramer, George Soros, and if you saw the movie Dumb Money, Stevie Cohen. I received payment from all of them for my analysis and picks. Retired in 2008 by the grace of God as a result of the revenue that came in from that. And now come here live to you 2 hours per week, basically every week, to share what I was taught, what made me successful. And trust me, it wasn't what the 10,000 clowns out there tell you. It was not what CNBC tells you. It is not even what colleges tell you. It is all a scam out there. All right. It wasn't until my mentor plucked me out. I was living in a basement, not a basement apartment, a basement, paying $143 a month with a $300 a month total budget to live off of, with a college degree, unemployed, losing money on stocks year after year after year until my mentor taught me what was real, which was totally different than what I was learning on CNBC and what I learned in college. All right. So he's the reason that I moved from the basement, the outhouse, to the penthouse, making millions per year, and I'm sharing that with you. Anyways, not so exciting. We'll get more exciting. I usually give them more exciting, for those of you who are new. For those of you, most of you are veterans, so you already know the deal. We got a lot to talk about today. Let's see if we got enough people to really kind of warm it up in proper fashion. Yo, oh man, we got an audience. Okay. Let's ramp it up. All right, because y'all know what it is when we have the audience and we have this time, 2 o'clock. It's Friday. It's Money Mark. It's Stock Talk Live. We got a big show today. AI. As always, for the last 3 years, I've been telling you AI is not a bubble. And guess what? Maybe it's a bubble now. And maybe the bubble just burst, right? So let's talk about it. We're going to get into that today. We're going to talk about a lot of stocks. You see all the stocks pegged over here. I think we're going to have some good time to discuss what you want to discuss this week. So, first of all, quick rules. You want your questions answered? Put 2 or 3 question marks at the beginning of your question so I can see it, because there's a lot of people putting comments in the chats. I love the comments. It hits the algorithm. So do that. But do not amongst those comments pump your own stocks, pimp your own stocks, and don't troll. Okay? I don't care about no trolls. You guys aren't going to bother me. Like, I pity trolls, and I talk about that every week, so I'm not going to talk about it again. Just, I hope in your next life you get love from mommy and daddy that allows you to not be a troll. But I don't care about that. I'm just going to kick you off my show, and then that's the end of it. So let's get into it. For you newbies, So this is generally, give you my little speech to help you become a millionaire, and then we'll get into the macro, and then we'll get into the news of the week, and then we'll get into your Q&A. All right. So first of all, first and foremost, let me cover my bases, and by that I mean my ass, by putting this on the screen. These are my disclaimers. If you continue to watch this show, then you acknowledge that you've read this or had somebody read it to you, and that you will adhere to this. This is all good by you, all right? We're going to flip off of the screen in a second, so you can pause this and read it in full later, but we do this every week, so you know what it is. All right, cool. For you newbies, all right? Very important to become a multimillionaire, to not get effed by the 10,000 clowns out there. Oddly enough, I'm showing my Twitter screen right here, right? Here's my Twitter page, by the way. The 10,000 clowns reside out here on Twitter and StockTwits, okay? And very few of the people in these forums are actually people that you should be listening to. I already told you that CNBC to me is a fraud, okay? That's just my opinion. Don't sue me, CNBC. But all they do is bring on a bull and bring on a bear, bring on a bull to keep you watching, to keep you confused, so that they can serve you advertisements. It makes sense. How else do they make money? They don't make money by making you money. You feel me? So, bottom line, if you want to be protected from the 10,000 clowns, you have to learn what to look for. And we're going to get into stocks in a minute, just a sec, veterans, all right? Listen to this. It's on my Twitter page. Money Mark Stocks is the Twitter handle. You listen to this. It's free. There's no subscriptions. There's no advertisements. There's no tricks. Everything I do is free across the board, okay? And so there's no tricks to anything that I do. I put this out there for you guys one time. It's not pretty, but it works. Listen to this. Read this. And you can see the URL if you freeze the page, markhomestocks.wordpress.com, and watch this, how I make money on stocks, on the YouTube page. Okay, good enough. You guys can go back, pause, rewind, whatever. But very important that you check those things out if you're a newbie, all right? Because what you're going to find out there is a lot of people who don't give you their real name, that don't give you their credentials, which is on the screen right now for me, and don't have a real-time tracker of their performance. I have all three of those things. I am not the only person that has all three of those things, but you will be shocked at how few people can pass those three tests for you to make a decision to listen to them. All right, so that takes care of that. Finally, as you guys go out there and start buying other stocks, like we gave you AEHR. Let's look at the chart of AEHR. Whoa, we wanted to be here. Look at that. I mean, thing of beauty. Congratulations to anybody who stayed on longer than I did, because there was my exit line. There was my entry line. Let's duplicate that. Down here at the green. Okay, we called it an AI gold mine right there. That was our ride, basically 10 to 70. Okay, I'm sorry I didn't catch the last 30 points. We're not going to always do that, because this is not a pump and dump show. This might be a pump and pump show, right? We get into these names. Most of my names work because of the research we do, because number one, once you've established that the person you're talking to passes those three tests I just told you about, the next thing that you want from them is when they give you a pick, you want to know who is the independent third-party industry expert that validated the technology or product that the company is selling. I'll give you an example. When AEHR came up way back here, even before the beginning of this chart, what you see right here, we can go back further, okay? I had a report commission, $5,000 I spent to have an independent third-party industry expert write a report about the various players in this marketplace, and what they told me was AEHR was the best of breed, and the best of the best companies in the world. If they're going to choose a product, they're going to choose the best product because they want to make the best products. and AHR was going to be it. And you see the chart. You see the rest is history. Because if you combine a company with the best products confirmed by independent experts with demand in the marketplace, in this case, EVs, Tesla was the end customer ultimately for what AHR was selling into ON Semiconductor, stock took off 2 to 52. EVs slowed down, right? We were already out of the stock at that point. And then AI took off and we got back into the stock, as I've already showed you here, knowing that we had already done the research on the fact that they were best of breed. An independent third-party expert gave us that checkbox, that all-important checkbox, so that when their story changed, we knew that it was cool because their technology was going to be the winner. It's easy. It's really easy to get rich. Okay? It's just that most people don't know what the 11 herbs and spices are. If I give you a recipe, you will make Kentucky Fried Chicken. If I don't give you the recipe, you will never figure it out. That's the difference. It's easy as long as you know. Okay? So that's it. As far as that goes, there's my track record. Okay? Haven't closed a pick at a loss for over 2 years. We've got 2 stocks right now that are open at a minor loss. I don't expect those to be at minor losses in the future. Which brings me to the next point, which is we do not want to be chasing stocks. Okay? So I talk about my educational materials at the beginning of the show. That's so that you can protect yourself and know the rules. You got people that bought Watt for the first time at $33 a share. What? Come on. Yes, I am positive on the company. We're going to talk more about the company today, but you have to pay the right price. I'm not here to tell you the right price. You have to learn, and I teach how to assess those things so that when you see a chart like this, you know what to do with it. You know what to do up here. You know what to do down here. You know what to do up here. It's really quite simple at the end of the day. Okay? So please do that. That is my speech for the day. All right? So know the difference between one of my priority ideas and when is a good time for you to decide to get in if you want to do that. Because, of course, as you saw my disclaimers, I am not a registered financial advisor. I am not your registered financial advisor. Okay? Boom. Speech complete. Out the window that goes. Bottom line, by the way, you see these stocks right here? I do like the prospects of these companies. They are on the list. They are in the minus on my sheet. That means I like them even more now than I liked them when I picked them. Basically, because in these 2 cases, I can tell you the story hasn't changed. In fact, I think the stories have progressed. Both of them have progressed relative to when I put them on this spreadsheet as priority ideas, and yet the stock prices are lower. Okay? So for you newbies out there thinking to dip your toe in the water at these elevated levels, which we are going to talk about, the Qs, the SPY, DRAM, Micron, Air, you just saw the chart. Do you buy these stocks at these elevated levels, or do you get into stocks that are at more attractive risk-reward levels? And yes, we have green lines, we got red lines in these spreadsheets. On these charts. You have to know the difference. And most of the people on this live right now know the difference between what is a green line, what is a red line, what are the white lines, and what are the gray lines. Got to know the difference. I'm not going to go over that again this week. Go back and watch last week's show. I talk about it like every week. But for you veterans, we're going to skip some of that stuff to have more time to talk about stocks. And speaking of which, let's get into that. So, first of all, Fear Greed Index. Real quick on the macros. We're on phase 2 of the show already. We'll be in phase 3 in about 2 minutes. 68. Really impressive, actually, that the fear greed index has not broken down very much despite today's drop in the market. It's remaining up there in the high 60s. We are looking for a move to 75 to get bearish. That doesn't mean the market can't correct 10% or 20% from this level of fear greed. It's just that we want fat pitches. Okay, and this pitch isn't quite fat enough. I want 75 on the fear greed to feel like it's a fat pitch. I want fear greed to drop to 10 to feel that it's a fat pitch on the other side of the equation. We don't have that yet, so stay tuned on that, and you can track this all during the week, right? I show it on Friday, but you can watch it. In fact, there's an app for it. Oof. Look, now this is the big news, y'all. This is the big news. Okay, this is a big part of the reason why you're seeing the stock market down so much today. All right, and it really comes down to a simple thing called interest rates, inflation, and liquidity. I'm not going to bore y'all with it, but very simply and easily, what you get in the marketplace right now with the situation I ran, with AI booming. There is price pressure occurring in the marketplace as a result of these things. You already know it. DRAM, Micron, those prices through the roof. If you've been to a Best Buy and tried to buy a laptop or some memory recently, you see it firsthand. Through the roof prices. Oil, through the roof. Gas, through the roof. Okay? That's inflation, and it showed up in the government figures. So, what does the Fed say? The Fed's going to say, we can't lower rates in an environment that's running so hot. Okay? GDP forecast for Q2, I don't know what's going on here. This is completely changed from, oh, here it is. No, that's right. It just looks a little different. There's the Atlanta Fed GDP now estimate. Close to 4% GDP. That's hot. Okay, so GDP is moving hot, and as a result, inflation hot. GDP hot, interest rates are going to be hot. Now, interest rates are at the highest level in a year. Look at that. That's a 52-week high on the 2-year yield, which is usually a leading indicator for Fed funds rates. So be careful because, oh, so what? The market's hot. Who cares if interest rates are 3.9 or 4.1? It matters because the bond market will react, okay? And it's interest rates, all else being equal, that feed into valuations for stocks on DCF analyses and things like that. So to keep it simple and to put a bow on this so we can move on, inflation, all else being equal, will lead to higher interest rates, and higher interest rates, all else being equal, will lead to lower liquidity in the market. And I've told you before, liquidity is arguably the biggest determinant of stock movement. Of course, valuation is king, long term, but liquidity has a big gravitational pull on which way the market goes on the way to fair value. All right. So we do have a problem, Houston. And oil and AI are certainly not helping to cool that fire right now. And it doesn't look like it's going to get any better. So be careful because this could be the beginning of a market correction. Whether or not it's a bubble, we're going to talk about that. By the way, let's save this for a little bit because I want to give you something a little bit more exciting. We'll talk about this towards the end of the show. That way we don't bore anybody. Let's get into Micron. We'll talk about that later as well. We don't want to bore anybody now. We'll talk about Micron. We're going to talk about Micron. Okay, cool. So let's do that. Let's get the chart out. I mean, this is like, what a home run. It's crazy because we hit a home run for y'all on this, but it should have been a grand slam, right? I picked this stock for you guys. You see the colored lines here. Let's see. Boom. You can go back in time. We can go way back in time. There you go. That's the picture we want to see. Okay. We are above the internet bubble levels for Micron on a long-term basis. Okay. Gone totally berserk. From what? Liquidity. The flowing liquid gold that is known as money. Right? The money has flown into stocks like Micron. There was the memory ETF that came out. Look at that thing. And what this did was gave investors access to non-US companies like Samsung and HK Hynix. Now, if you don't know who those companies are, right? They're DRAM players. I know you've heard of Samsung, but Samsung is one of the biggest DRAM, one of the biggest memory providers, not just phones. Okay? And Hynix is as well. It's the big three: Samsung, Hynix, and Micron. Micron's the only one listed normally on an exchange. So these geniuses at Roundhill decided to put them all into an ETF, and people jumped on it. Okay? And so all that money flowing in indiscriminately, like it has not necessarily anything to do with valuation. It's just desire to have access to the memory market drove these things up. What is fair value? Only God knows. Anybody who tells you otherwise is a clown. Okay? I've been doing this. I've been following Micron as far as this chart goes back. And what always ends up happening is when the market gets hot like this, when the market got hot like this, inevitably more capacity comes in because this is a commodity market. Micron does not have a monopoly on DRAM or HBM or SOCAM that's going to be in the next iteration of NVIDIA chips. No, 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 no. They're not even number one. They're not even number two. Independent third-party industry experts say they are number three. They're the third best out of three major players in the market. Okay? So they're at a disadvantage already, but they are competing against other players. And if those other players raise their capacity, put up new factories, produce more DRAM, it's going to pressure prices, all else being equal. Not only that, though, there's a Chinese. Oh, no. There's that magic word. You know what the Chinese do? Dumping product, right, in the marketplace. Well, there is a Chinese manufacturer out there, okay, CXMT. Look them up. You can ask AI about them. They are putting out DDR4, early stage DDR5 modules at approximately 1/3 the market rate. Why would they do that? That's what the Chinese do. They want to gain market share. They always chase market share. They don't like to play nice with an oligopoly of three vendors. No, 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 no. We see money, we see profit, we're going to go grab it. That doesn't mean it's over for the DRAM manufacturers, but be careful, because if these guys start producing enough to have an effect on the market, and if enough of their manufacturing of their product makes it over to the West, our side of the globe, right, it could be a problem, a big problem, because at its low, Micron was $1. Now it's 741. I'm not saying it's going back to $1, okay? I'm not even saying it's possible. But at these levels, when you look at this risk reward chart, it just screams, be careful, because you are not jumping on something that is new and undiscovered like we did with Air at $2 and $10. Almost nobody knew who Air was at $2 and $10. And now everybody knows who Air is. Once everybody knows, then everybody is looking into it, and everybody includes hundreds of Wall Street professionals who went to Wharton and Harvard for their MBAs, and you want to compete against that? No, 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 no. You want to be early. We were early on Watt. Started talking about that sector when it was in the single digits. It went up, what, 4 bags from that level? Okay? And now a lot of people talking about Watt. A lot of people talking about air. You got to be careful at that point. You have to know more than everybody else to have an advantage. All right? So be careful. And by the way, not for nothing, but we've got Cerberus as well, right? CBRS came out hot. Oh, CBRS. There we go. I mean, who IPOs at $380? These guys do. And they have a solution that has memory built in. And you're going to see more of this. With memory prices, when DRAM price is so elevated, you're going to see innovative solutions for fixing this issue. And that is going to pressure these guys. Now, pressure doesn't mean kill. It might not even mean hobble, because if there is more demand pressure than there is supply pressure added, then the stocks can keep going up. Cool. But that's not really how I see it. I see the risk to the downside ultimately, okay, because we are in a situation where there is a lot of incentive for companies to come in and find ways to solve the problem of memory prices going through the roof. All right. You can put your questions in the queue, but very important to pay attention to here, because I know there's a lot of y'all out there with FOMO. I've missed the ride so far. I didn't buy Micron when Mark said so at 100. I didn't even buy it at 200 when Mark said to sell. Because, hey, I doubled my money quick and I was out, right? We were at 100 to 200. That looked good. I mean, I don't blame anybody that waited until we got to the red line at 289, because frankly, that's exactly what I should have done, is just rode it to the top, right? And then just kept going, though. It just kept going, and then people started chasing. And you're in a dangerous situation here. I will almost guarantee that at some point in the future, you will be able to buy this stock for a lower, and I will say a substantially lower price than where it is right now. The market cap is crazy for a company that is number 3. I don't think I've ever seen a company that is number 3 in its space, trading for 800. Do you know what this is? This is almost $1 trillion. Do you know how many stocks have $1 trillion market cap? It fits on these hands. But what doesn't fit on these hands is a number 3 player in a space that meets this criteria. No, to me, that's crazy. All right, so be careful about that. As far as Cerberus, I think people are chasing that as well. We have entered a real frothy position in the market where everybody is finally acquiescing to what I've been telling you all along. People telling you that AI is a bubble, and every single time. Have I ever wavered in 3 years in telling you AI is not a bubble? Okay? And AI still is not a bubble, but some of these stocks are. So be careful. We'll talk more about that as the show goes on, especially with the Q&A. Put your questions in the queue. Follow the rules, of course. Put question marks at the beginning of your question. All right. All right. Let's get into individual companies, other individual companies, I should say. Energous, Watt, WATT, the latest and greatest of my priority ideas. We're not calling them picks. Right? I don't want to imply that I'm telling you to buy the stocks. Those are your decisions. I'm here to provide you with research and information, and you decide what to do with it. Okay? They had sequentially up revenue. Slightly, but up. Which is strong. You do not typically see this when a company like Energous goes from Q4 to Q1. So do not be fooled by the fact that the sequential from Q4 to Q1 was not some big hot number, because the year over year number was crazy. 799% growth year over year. Okay, so they did something unusual, which is grow in Q1 versus Q4, and they did something extraordinary in terms of growing 799% year over year. And I expect that trend to continue. You're going to continue to see triple-digit percentage growth in these guys for at least the next 2 quarters. Okay? Excuse me. Now, so let's get into the rest, because we already talked about some of what's going on with the company. I had a little watch party where we went through the PR. Okay, there was some excitement going on in the story trading communities around the discovery and discussion of McDonald's being somebody who is buying Energous boxes, and Energous talking about not McDonald's, but a company that describes McDonald's. They're not mentioning Walmart, Amazon, McDonald's, their customers. It's unquestionable when you look at their investor presentation. Fortune 10 retailer, who could that be? Another Fortune 10 e-commerce company, who could that be? You can just look up the Fortune 10 and you'll know who these two companies are. Okay? Interestingly enough, though, they've added this in addition to what they had before. Okay, they actually substituted what was in the middle here, right, with this, because they felt like this is more exciting. They put the most exciting here, second most exciting here, the third most exciting here in the middle, and what was third most exciting before is probably now fourth most exciting, because they replaced it with this, and it says, this is their new investor deck, by the way. Energous solution, 1 QSR, quick service restaurant, McDonald's, and 3 national grocers on top of it. I didn't know this, okay? I do crazy research. I've been telling you about McDonald's for weeks, if not months. Now it's known by the general public. I didn't know about the 3 national grocers, okay? So this continues to show traction in the marketplace, growth in the marketplace from a qualitative perspective, all right? We also had this very interesting quote from the earnings call. If you are interested in owning a stock, you should actually make it a rule for yourself to listen to the earnings call for those companies. Okay, it does 2 things. 1, it will force you to not own too many stocks. Because if you promise yourself that you're going to listen to the earnings call and you own too many stocks, you won't have time. So you're going to have to sell the stocks that you don't have time to listen to their earnings calls for. That's good. And 2, you're going to learn more about these companies by being on those calls. All right. So, but for those of you who don't have time to do any of that, well, there's me, right? We are at a point where a lot of other customers within retail, within manufacturing, within logistics are not anymore on the fence about this technology, are not anymore on the fence about ambient IoT, and they want to get a piece of it. And so, this reflects the acceleration momentum that we see through POCs, proof of concept, companies trying them out, AWS subsidizing them, taking money out of their own pocket, AWS being Amazon, taking money out of their own pockets to say, try this, because you're going to like this. Because the world is out there, what we are doing with the Fortune 10 customers. So anybody else within the same space or market wants to get a piece of the technology because the benefits are very tangible. Okay? So there you go with that. Boom. There you go with the QSR and the 3 national grocers. Boom. What else? Did we miss anything here? Nope. Okay, we keep going. 5 converging tailwinds. Not just one. When I started covering this space, which led me to this company, you got Identive, INVE. I looked at it. I was like, okay, cool. I looked at Repositrack, TRAK. I said, okay, cool. I looked at WATT. I said, wow, wow, wow. I looked at those 3 companies because I saw government mandates that were going to require big corporations like Walmart, like Amazon, like McDonald's to adopt IoT, ambient IoT technology. Okay? That was the investment thesis, and nobody was talking about it then. Nobody was talking about Identiv. Nobody was talking about Repositrack. Nobody was talking about Watt. There's your advantage. Get in before people realize that there's something big going on. Government mandates, that's big. 3 public companies nobody knows about, that's beautiful. But there's more. It's not just one converging tailwind, it's multiple. The AWS partnership becoming ISV Accelerate. Ambient IoT becoming a big piece of AI because AI loves what, folks? Data. And what collects data? Sensors. And what powers sensors? Ambient IoT. Okay? So you got all that here. And then the regulatory push, when you look at FCC, 2 watts, 8 watts, EIRP, look it up. They are the only company that has FCC approval for that. The only company. That means if you need this, they have a monopoly on that. Okay? Best company. Goes back to what we said. And by the way, I did check with independent third-party industry experts to validate that these guys are the best in at least some segment of the market. Okay? This is how you win. All right. So that's that. And of course, we talked about Amazon getting into UPS's domain and how that could be positive. So we won't repeat that. There we are with the AWS site for those of you who didn't see before. If you want proof that Energous is a partner of AWS in the ISV Accelerate program, which is a high-end program, not just, you know, we've got you on our website, I hope somebody buys your stuff for you. No, they are actually comping their salespeople, giving their salespeople credit towards their quotas, and subsidizing the proofs of concept for Energous' solution. Why would they do that? Why would they spend all that money? Because when Energous' solution gets selected on AWS, then AWS gets all that data. They get a new customer too. Energous is small potatoes compared to what AWS gets out of those wins. All right, that's it. We'll go to Q&A for anything else you want to know about that, but that's the update there. So very nice progress. And by the way, they have been selected for a fireside chat, not just a presentation, a fireside chat at Planet Micro, the premier micro cap investment conference at present. LD Micro being my favorite, by the way. Okay, let's not mince words about that. But those guys have fallen off a bit. We'll see if they're able to come back. All right, but right now, Planet Microcap has the floor, has the momentum, and they're going to feature these guys next month at at Planet Microcap. So that's about a month away. So next. What do we got? Very quickly, some boring stuff here. Geodrill announced their first quarter results. Not great. You know, they say we'll be better this coming quarter and even better in the second half, blah, blah, blah. But the drills, it's all about the drills. You got gold, copper, et cetera, et cetera. And this company, here's your risk-reward chart. I've told you before, the drills that they own, if all they did was sell their drills into a market that is hungry for more drills, they would get way more than 275. Okay? So, yes, a stock can always go down, but the value of the company can stay stable. And drills aren't changing in value except going up. So the value of their drills is going up. The stock's going down because people get bored, people get disappointed, etc., etc. That's just buying and selling of stock. But when it comes to the buying and selling of actual drills, those are in higher demand and going up in price. So the underlying value here is up. Okay? And similarly, I actually bought some silver today, right? Not telling you guys to do that, by the way, but I did buy some silver today, down 8%. And silver is in higher demand from what I can gather. And I'm not an expert, so I'm just giving you right? Remember what I told you at the beginning of the show. Focus on my priority ideas. This is the most important thing. These are the names, right? These are the names I put my reputation behind. Everything else is extra information for your digestion to do what you want with. So follow the rules as far as that goes. Okay, but silver to me seems to be in higher demand than the current price will show. I think this is just liquidity in the marketplace causing silver to go down. We have a consolidation, of the price action that we had earlier in the year. That's cool. But silver, gold, you name it, all in high demand in the marketplace, and GeoDrill can take those things, copper, gold primarily, out of the ground, so that demand remains unabated. So boom, there you go. So despite the results not being exciting, there's still underlying exciting value. Same with TPCS for that matter. They didn't report earnings this week, but that's the same story there. Underlying value. And in a market that's so extended, I mean, we didn't go over the market charts, but I mean, look at this craziness, right? We're in yellow alert in the IWM, poked above it, and poked right back down. But the Qs, I mean, I'm sorry, at this point, we popped above the technical channel. We're way above the fundamental channel. We're above the red line now. And I did tell you that this could happen. I did say that we could enter bubble territory for the NASDAQ because of AI, because of what I experienced as an internet analyst in 1999, a bubble. And we have that now. I will say that the Qs have entered a bubble because we are 16% above the long-term trend top line. Okay, there's your bottom line, way down here. And for those of you who don't think that we could get to the bottom line, Mark, you got to be crazy. No way the NASDAQ could ever get to 200. Oh yeah? Well, what the F do you think happened way back here when people that said, Mark, there's no way the NASDAQ could get down to 20? Well, it did. The NASDAQ was 120 and went to 20. The Qs went from 120 to 20. If that happened today, right, from 712, do the math. From 712 to do what this did would take us all the way down to like 120. Below my green line. So be careful because we are not only 13% above the long-term valuation line, we are also above the technical value. This is rarefied air, okay? Now, keep in mind, I'm not telling you to run for the hills and duck and cover and get into a bunker and never come out. No. Because look at this. You don't want to necessarily potentially miss this because we hit bubble territory. Oh, I didn't mean to do that. Damn. Definitely didn't want to do that. We hit bubble territory on the NASDAQ back then, right here. Right here, it had become a bubble, and it just kept going up. You know what I'm saying? We had that straight line move up into bubble territory, just like we have recently, and then it kind of consolidated a little bit, and then continued on, and then actually went parabolic at the end. There was a lot of money to be made off of that. I did. I doubled my money in 2 months, November, December of 1999. I doubled my money again in 2 months, in January, February of 1999, before March 10th came and the market collapsed hard, as you can see. And then I went short and made 40% a year for the next 2 years by being short. That's what happens when you understand valuation and understand the difference between a bubble and a normal trend. So be careful because I am going to say that I do believe the Qs have entered bubble territory finally. Let's keep going. We got a lot of AI to talk about. Vertra came out with their results. Not exciting. I'm sorry. Like, if the valuation wasn't so low already, I would get out. Okay? I'd be out. I'd be done. Like, these guys need to reprove themselves to me. Now, the only thing with the stock is you've got like, I don't know, what, 18 million of cash it is? 14 million of cash. That means you've got an enterprise value right? You got a market cap of 37 million, back out the cash, it's closer to 24 million. That is equal to basically their revenue. It's like 1 times revenue. It's like 1 times backlog. And we have an environment where funding for the police, military programs is now coming back. We had a continuing resolution, with the government shut down and all that. That hurt their business. That should come back. But at the same time, we have increasing competition. I've talked about that before. On the training side of their equation, as well as the recoil kit side of the equation. So it remains to be seen how much of a positive impact the return of funding is going to have on their business. For now, if you're there, you might as well stay there, because you see there's been a sharp drop off in the stock. You don't want to chase a move down, just like you don't want to chase a move up. But if there is a bounce up, if there's a nice sharp move in the stock, you might want to take advantage of that to lighten your load, unless you really believe they're going to come out of this. But it's questionable at this point, all right? And ironically, this is the last dumb move I really made in the market 2 years ago that really got me angry at myself, right? My research led you into a bad position if you decided to follow what I was doing or get into this stock, and that pissed me off. I'm here to make you money, not lose you money. And as you can see, getting pissed off, this is what happens when Money Mark gets pissed off. He goes on a run, okay? 15 straight names, all of which were in the positive, and right now, as of right now, with the market down at this moment, only down very slightly on 2 of those names. 13 out of 15, and 2 of them are new, and I expect those to go up, okay? That's what happens when Money Mark gets mad. For those who don't know about my background as a competitive track and field athlete. So that's Virtra. They got to do something. They have to prove themselves. I personally am going to wait until they do something. I'm not going to trust that something's going to happen. But at this valuation, it's hard to go anywhere. It's kind of a catch-22 because it's too cheap to sell and the execution's too weak to be excited. All right? So keep that in mind, because if the stock gets exciting before the fundamentals do, take some profits, okay? Or cut some losses, I should say. Intermap came out with their results. Some good underlying growth here in some of their businesses, but it's very small dollars. We're waiting for Indonesia, which is big dollars. Okay, these guys put up very low revenue, 1.4 million for the quarter. That's a $6 million annual run rate. The Indonesian deal is probably worth like 180 million. Just to put it into context. 6 versus 180 million. But they haven't gotten the Indonesian contract yet. We're waiting for that. Okay? So while we wait for that, the stock has languished. The excitement around the Indonesian contract got priced in. There are my lines. You see? So you should have known as the stock was getting into these territories that this was a profit-taking opportunity for something that wasn't baked in. I mean, not baked in, etched in stone. Locked in. Signed, sealed, and delivered. Indonesia is not yet signed, sealed, and delivered. I think it will be, but it's not yet. We haven't seen the second inning, so we don't know that it's game on. And I tell y'all every week, for you newbies out there, pay attention, write this down. It is better to show up in the second inning than to get rained out. Okay? So, and that's what I do. That's part of how I get rich, is that I wait for that second inning instead of getting rained out. You see that happening also with Permafix, who I talked about years ago. We got out way back here at like 12 bucks. Okay? And the stock has spent very little time above 12 bucks since. Here's your line. There. 12, 13. It was somewhere right around here. Okay? It spent most of its time under those levels since, because what we were expecting to happen, right? The great find. What was the great find? They're going to clean up a nuclear waste facility. It's going to be tons of money. Guess what? It's actually happening. That wasn't a pump. That's real. But once everybody knew that that's what was going on, everybody bought into the stock saying, this is a great find. And the stock got too expensive for the opportunity. Too soon. And boom, the rest is history. And now you see them raising money now. They just raised some money. The stock got whacked, right? Because we're still waiting for the second inning. I think it's going to come. But I don't bet money on what I think is going to happen. I bet money on things that I see with my own two eyes before everybody else does. And if everybody else does at the same time as me, big deal. I move on to the next. I'm looking for the ideal fat pitch. That's how you make money. Picky, picky, picky. And with Intermap, right? ITM, for those of you who want to see the US chart, there it is, right? There you go right there. It's a pretty good price right now. And I do think this is going to be resolved within the next, let's say, 1 to 2 months. And then the stock should take off. So I own some. I accumulated more as it was dropping. I thought $1 was a great price for me to accumulate. And it's turned out to be the right answer. Okay? I think we talked about that on a show not too long ago. But I didn't back up the truck. I'll back up the truck when the second inning starts. I started to accumulate and place a small bet on what I believe is going to happen based on the common sense of the progression of what we're seeing in the Indonesian contract. All right, next. Okay, we're getting ready for Q&A. We'll talk about all the AI you guys want to talk about. By the way, some housekeeping. CTLP doesn't exist anymore. It got acquired. We made our money. Money, money, money. I told you. Money told you. Money told you to buy that stock and more importantly to buy CTLPP. If you did, it should now be out of your account. The last thing left over in my account right now with CTLPP are options that as of today, come Monday, you will not see CTLP, CTLPP, or any CTLP options in your stock account come Monday. If you do, call your broker because that's a mistake. You should have your cash. Money, money, money. One thing that I'm watching, this Techagen, okay, I didn't like it up here. That turned out to be right. The stock dropped 80%. I thought it was hyped up, right? The great find. This was a great find, right? Chillers, natural gas chillers. Sounds like a great find to me. Right? But the stock went too high, too fast, too early, and I didn't see enough demand for what they were doing. Now there's some question about that. It might be because of the demand for energy, finally, after all this hype, it's been what? 8 months. That's a long time to still be down 48% from where it was. Excuse me. Right? But it's also run quite a bit very quickly. I've been very busy, haven't had a chance, and it's only right about here that I learned, and it's just like in the last 2 days it just spiked up, right? So this would have been nice at like 384. I would have liked 384. If the market pulls it down to 384, cool. I don't want to be chasing up here at 661. But there are signs of life here that suggest that maybe the great find that turned into a wait time might turn into a gold mine at some point in the not too distant future. But that's not even first inning stuff. We haven't even seen the first inning yet, much less the second. So be careful. But I want to talk about these AI stocks. So there you go. Just giving you the information that I've gathered. Also, by the way, those of you who want to send me your ideas, your picks, I'll give you 2 ways of looking at it. One, well, I'll give you number 2 first. Don't. Right? But number 1 is if you don't get to number 2. Number 1 is if you find a pick where you have done what I do, what I have told you multiple times every week and on this show already multiple times, you have validated from an independent third-party industry expert, and that is not Jim Cramer, that is not some dude at Morgan Stanley, an industry expert is somebody who works in the industry and has done so for at least 10 years, preferably multiple decades. So if you're going to bring me AEHR, I need somebody who has worked in the semiconductor capital equipment industry or the semiconductor industry, who buys semiconductor capital equipment, testing machines like Air makes, that has told you, yeah, this is the best stuff. Okay? And yeah, I know that sounds hard, and maybe you can find it using AI. AI has definitely made it easier. I find independent third-party experts much easier now using AI, but I look for that. And you need to. And if you're going to send me a pic, it has to start with that. After that, if it's a great story and all that, that's cool. Send it my way. But if it doesn't have independent third-party industry expert attached to it, you are wasting your time texting me, writing me, email, whatever you do to get your pic in front of me. I throw it away. I don't even look at it unless you lead with the independent third-party industry expert, because it's a critical. I consider it the cheat code in the 11 herbs and spices that makes the Kentucky Fried Chicken that makes me millions per year. Okay? So that's that. But somebody did send me a stock with that criteria. And when they did, I did my research and gave them my analysis for free on that stock. Okay? Spoiler alert, it didn't quite pass. It might in the future. I'm not going to talk about it right now. Okay? But it didn't quite pass, but I sent my full analysis to that person because they followed the rules and sent me an assessment with an independent third-party industry expert as the lead. All right, so that's that. More AI. Let's see. Also on AI, I'm hearing about double ordering. And if you don't know what double ordering is, do not tune off right now, because it can save you a ton of money. You don't want to lose money on your stocks. You have to understand what double ordering is. What is double ordering? Right now, we've got a situation in the market where everybody needs DRAM, right? Everybody wants Micron DRAM. Yeah, cool. But here's the problem. Because everybody wants it, because everybody needs it, the prices have gone through the roof, and then they've gone through the roof on top of that. Remember when I told you back in December that the prices were going to go up 80%, and then I came back in January and said they were going to go up another 80% on top of that? Look what the stock has done since then. Okay? When that happens, the customers in the marketplace, the hyperscalers in this case, will go to Micron, Samsung, Hynix, and order extra. They will say, they might only need, let's say, 1 million. And they'll say, we need 3 million. Why? Because they want to trick these guys or entice these guys or encourage these guys to expand their capacity. Why would they do that? Simple, stupid. If they overbuild their capacity, then there'll be too much DRAM in the marketplace. The prices collapse, and all of a sudden, the hyperscalers can get all the DRAM they want at a super cheap price instead of getting very little DRAM at a super high price. This has gone on as long as I've been in the industry, and that is the early 90s. I broke into the technology industry, and I was taught that early as something that had already been happening for a long, long time before I even entered the industry. So be careful, because I'm starting to hear about double ordering happening in the marketplace. I'm not going to specify who told me or what the context was, but it was a very real-world example of actual double ordering happening out there in the marketplace, and that's the first sign of problems to come in the market. So be careful. I had a one-on-one with Crescendo Management, the president, the CFO. Very good call with them. I was very encouraged by what I heard out of that. Let me see. There's something else I wanted to tell you. What was it? Hold on. Give me a second, because, money making information. Just give me 1 sec. Oh yeah, we want to talk about Evolve too. So let's go to Evolve. Okay. Before I forget. We'll come back to Crescendo in a second, as well as Twilio, Akamai, and Cloudflare. and then we'll go to Q&A because we're at the top of the hour, 3 o'clock. Evolve came out with their earnings, and the craziest thing happened. Out on the internet, the wrong numbers were given. The wrong revenue number. They had better revenue than a lot of the internet outlets reported. The guidance was raised. Many internet outlets reported that they lowered guidance. So what was a beat and raise was reported as a miss and lower in some internet outlets. And you could see the stock got smoked to $5.38. It has recovered somewhat to $5.64. But all indications that now this prompted me to go do a little extra research on these guys and what's going on in the business and all that. And what I came up with is things are going well. Okay? I'm not adding them to the priority list yet. Right? You stay tuned. Nothing's official until I put something there, but I'm here to give you my information so you can decide what to do with it like you asked me to. And I'm telling you, I bought the stock, and then I bought more of the stock as I did more research, and I'm willing to sit. Like, I'm looking at it as a trade. So if the stock bounces really hard, then I'm out, right? I'm not going to define what really hard is. It could be 10 cents for all you know. But in reality, if this thing doesn't bounce, to recover a decent chunk of what was lost, I'm perfectly happy waiting for the next earnings announcement on this stock, because what I'm seeing is great demand. I thought it was a good quarter with good guidance. The guidance was raised. I think this is a conservative management team, so I think they just raised the numbers, and I think they're going to beat those numbers. So why wouldn't want, like, in a market that I'm having such a hard time finding a company operating close to all cylinders, not trading at the red line, right? The red line's for companies operating on all cylinders. So if you're at the red line and not on all cylinders, you don't want to be in that stock. But if a stock is operating on all cylinders and it's not the red line, you probably want to be in that stock. And this company is operating, it looks to me like pretty close, if not at all cylinders, and it's trading way below that. So boom, I want a piece of that, even in an elevated market. Just be careful, because you see, it's not on this list, right? But it is. Like, this is probably my largest position outside of names on this list at this moment. Let's get back to Crescendo. Met with management. Very positive, right? These guys can continue to make acquisitions. Somebody asked me about cash. Do you think they're going to raise money? And no, these guys, like, this is a cash flow machine. Cash keeps rolling into this company, and they're just trying to figure out what to do with it. They're going to take that money and buy something else with it. If they need some debt to do that, that's great, because look what happens. Okay? This is the difference between a bullish raise and a bearish raise. Bullish debt and bearish debt. This company makes money. They are generating cash. They do not need money. They are not in net debt. And therefore, any money that they raise, whether it's by debt or by stock, is bullish. Okay? And the business is going bullish. The AI solution that they have, the AI receptionist, is going well. Nothing but positive things to say about these guys. Okay? Just keep an eye, because the stock has run, right? Follow the rules. But these guys are operating really well, and I do think this is a closet stock for me, right? What does that mean, newbies? A closet stock is a stock that you just put in the closet and forget about. All right? So there you go. And this follows the theme. I was talking about Twilio, Akamai, and Cloudflare. The theme that I told you about. When you look at these stocks that have gotten smoked, the software stocks, the cloud stocks, Salesforce.com, ServiceNow, SAP, Oracle, Workday, all companies that I covered dating back, the ones that existed back in the 90s, right? Workday being a newer company that actually came out of PeopleSoft, which was acquired by Oracle. Back when I was covering PeopleSoft and Oracle, I remember it happened. I was at an industry conference in Phoenix when that acquisition went down. And then the PeopleSoft guys went and started Workday. So I've known this company since it was a little private company just getting started. Became a big company, smoked recently, okay, because of AI, And so everybody was selling software stocks. Let's sell everything that's software. And so you saw Crescendo try to break out right here and then got smoked along with everybody else. And I said, no, 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 no. This is not software. This is software-enabled infrastructure. There's a big effing difference. And write it down so you guys know. Software versus software-enabled infrastructure. Listen, I've been covering software my entire career. 1993, I got out of college. I've been covering software ever since. I'm a little concerned for what's going to happen to software companies. Of course, the rest of the market has caught on to that, right? And we are at levels that say it's probably more of a risk-reward bet to buy these stocks than to sell them at these levels, by the way. Okay? That being said, there is some concern over the long-term value of these models that they're in. Like Oracle's going to be around. SAP's going to be around. Like you can't replace these systems of record. These are the best companies to buy at these prices, mind you. But if you're software-enabled infrastructure, AI is not going to replace you. In fact, AI is going to help you. Because if your infrastructure is software enabled and AI helps you make software easier, guess what? Your infrastructure is going to be even more enabled at a cheaper price. Whoa! Wait a minute. AI is not bearish for these guys, it's bullish. Oh, Money Mark said so. I should have bought Crescendo when it was $5.63 when everybody was panicking, because I would have made 72% in less than 3 months on this boring name. Crescendo's so boring. Is it boring now, stupid? Dummy? It's a boring stock. Oh, yeah. Good, good. Tell that to my boring $1 million. Stupid. And who else makes software-enabled infrastructure or has software-enabled infrastructure? Twilio does. I told you about them at 100. Now it's 200. I still own the stock. Stupid. Software-enabled infrastructure. Akamai. Dummy. Cloudflare, another one. These guys have some internal issues to work through, okay? But it might very well be worth the gamble because the trends are in their favor. They are considered best of breed at what they do. In fact, better than Akamai at what they do. And you see what happened to Akamai. So, look, if I was going to own Akamai or Cloudflare, or if I owned Akamai today and I wanted to stay in here, right? We can get rid of that note. I would flip my Akamai into Cloudflare. I'm not in either one at the moment, but I am in the process of doing my research on Cloudflare and considering entering a position, given that it's just given us a night. You know what? Maybe do I own? I think I might have gotten out of the way because I think I owned some and then got out of the way because of the market being so high. I'm going to tell you in a second. I like to be accurate and honest. Yeah, I owned some Cloudflare. I got out of the Cloudflare for now, and I'm inclined to get back in as long as everything checks out. Okay, but this is a large, very high market cap company. I'll tell you in a second, right? And the low-hanging fruit, guys, the low-hanging fruit is on lower market cap companies. I make my millions primarily. Most of my millions per year are made on companies below 500 million in market cap and below 250 million for that matter. Okay? $500 million, $250 million. Cloudflare, 70 billion. Cloudflare is 140 times bigger than the types of companies that I like to look at a maximum. All right, so keep that in mind too when making your decisions. All right, so that's that. Anything else on my notes? Before we go to Q&A? Nope. Time for Q&A. Let's see what we got today. We got the hellos. I do look through all of these comments after the show, so please keep them coming. right? I love the comments, and they don't hurt because it's easy for me to see the questions within the comments because you put your question mark at the beginning of your question, right? So keep the comments coming, keep the questions coming. We'll see what we can get through them all. At 3:45, we'll go into the lightning round. And until then, I'll give you as full an answer as possible. TPCS, happy Friday. From the April 17th episode, you mentioned the possibility of Berkshire Bank stopping TPCS loans going forward today. Is there an update on this? I could not find anything. I believe that this is going to resolve itself. It always does. Okay? Like, TPCS is too important to fail. They are critical to the U.S. government shipbuilding, submarines, helicopters, and F-15EX fighters. Okay, so this has always been an issue, right, with Berkshire Bank. Some people highlighted that this time it looks a little more onerous. Yeah, it looks a little more onerous. I'm not worried about it. Okay, they're going to figure it out. And, maybe we'll see a filing over the weekend as far as that goes. Okay, if not, right, here's the thing. If the company gets forced to sell itself because they can't get anybody to loan them the money they need, the government gave them like $24 million already to buy equipment with. They already had like $25 to $50 million of equipment themselves. So that's like $50 to $75 million of equipment, and the stock is trading for $40 million bucks. You can do the math. It might almost be to our benefit if they're forced to sell themselves. Okay? Because I don't think they would get liquidated, by the way. I don't think all you would get is 50 to 75 million for the equipment. The actual business, the contracts that they have with the government for submarines, Virginia, Columbia, F-15EX, and CH-53K is something that DRAM, GHM would love to get their hands on. A company that has done great, has made great acquisitions. And you can see back here, when I typed in defense stocks, I told you about defense stocks being a great place to put your money back in late 2023, before it was in vogue. Watch what happens when I show you these charts. Right here on this chart, right where this arrow is where we start looking at these stocks. General Dynamics. Wow! That did pretty good for a boring defense name, stupid. Raytheon, what is it, RTX? Oh, I guess Mark was right, stupid. Defense is not an Anduril, one of the hottest private companies on the planet now. Kraken. Look at that. When I told you about defense stocks taking off, Kraken was 34 cents. I made it a buy at 67 cents. I got out triple, $2, and it continued up another triple from there. You have to pay attention to these things. You have to understand that you do not want to go with what everybody else is jumping on. Or, look, and there's the other one. TPCS, GHM, and DRS. TPCS is the only one that hasn't gone through the freaking roof. Okay? Much to my chagrin, of course. But you could have bought any of these names when I told you. RTX, GD, GHM, DRS. It's all there on your screen for the taking. Okay? And TPCS, having messed things up for themselves, now just makes them ripe to get acquired by somebody. That's all. Okay? Let's go on. Thank you, Mark. My closet stock. You buried the lead. I mean, you clearly put this comment in there before I said it. Okay? Evolve had an excellent call. Let me see. Yeah. What's your question? Can we also say that Evolve is a closet stock? Yeah, I would call Evolve a closet stock. In fact, when I took them out of my portfolio, right? When this stock got to the red line, what I said is this stock is graduated. Because look at the market cap. I told you I like companies that have a market cap under 500 million. Well, they're at $1 billion now. Okay? This stock did have a market cap of under 500 million at points when I was talking about them. But now it's $1 billion. All right? So that's what we're talking about there. This is a validated, third-party, industry analyst, validated leader, best of breed in what they do, and what they do is in high demand. Yes, they are a closet stock. This company graduated from my portfolio. I didn't dump. See, this is the thing. The difference between those pump and dumps and what I do is I don't just jump out of a stock, jump in, jump out, jump in, jump out, and right? My priority idea list lasts a long time. The average number of days that I've been in a stock in this portfolio is what? 272 days on average. That's 9 months. 9 months. Okay? And I'm willing to go much more. Look at this. Crescendo, 673 days. Geodrill, 733 days. That's almost exactly 2 years. In fact, it's 2 days over 2 years. Okay? I'm an investor. Primarily, not a trader that you see out there. And investors make more money. Name the richest trader on the planet. Name the richest investor on the planet. Oh, you can name the latter. Warren Buffett. Who's the richest trader? I don't know. But he's not as rich as Warren Buffett. Unless he's only richer because Warren Buffett gave his money away. Okay? Buffett broke the game because he was an investor. Let's get back to what we're talking about here. So yes, I see it evolve. So when I take a name out of these portfolios, oftentimes it is because they have graduated into something more. And you can see my first pick back in my first idea back in 2014 on this list was Facebook. Okay? And let's face it, Facebook is not a tiny company anymore. They weren't tiny back then either, but they're a whole different beast now, right? Than they were in 2014 when I basically bottom ticked the stock. What did I pick that stock at? That was 57 here, but I was talking about it at 18. Anyhow, let's get back on track here. Let's see what we got. Let's get an AI question. Looking for questions. Let's see. Oh, we want some charts. Let's go here. Okay, what charts do we want to see? If you want to see a chart, put 3 question marks and the ticker symbol. Somebody asking, do you still like OPTX? I don't answer questions like that. You're a newbie, so I'll let it pass. But I don't do that. I give you all the information I have every week, right? I give you these charts. So these charts can tell you exactly, these charts represent my feeling about the risk and reward of a stock. And I talk to you about the progress that a stock makes. I've talked about the progress on this stock in prior episodes, and if you missed that, then you don't miss prior episodes, okay? Because everybody else has their notes on this one, and everybody else knows the answer to this question, all right? I think these guys are in a very good position. We need to see that play out in terms of orders and revenue cranking up. They are involved with Anduril in the Eagle Eye program. That's right. That's a hot buzzword. From a purely trading perspective, if we see Anduril come out with an S1 to go public, I think everybody involved with Anduril is going to go up in price. That's Kraken. You know, the 2 major ones that come to mind, Kraken and OPTX. And you see their charts look very similar right now, probably for similar reasons. It's like a lull in the action of the Eagle Eye program getting ramped up. And it's like that buildup because there was that hype of Anduril taking over and the Eagle Eye program going to take off. And now we're just waiting for that to happen. And so people kind of get bored and go somewhere else. I only gave you that full answer because you're a newbie. Anybody else, I'm going to call you a dummy and move on to the next question because you got to follow the rules. Thoughts on Intermap earnings? We talked about that. Evolve. How could the markets be so inefficient in correcting from the misprint? Is there more to the story? Not that I can find, okay? But how can the markets be so inefficient? Bro, if the markets were efficient, I wouldn't be able to make millions per year because we would all be operating on the same level. I pray to God, aside from good health for my family, the next thing I pray for is market inefficiency to continue, because that's what makes millions. Because the lazy people out there, the clowns out there, the pure chart traders out there, the people that are not willing to do the work to be what I became, a professional, to follow the professional rules, to follow the Warren Buffett footsteps, but put a little cocaine on it, right? Sniff it up and here we go. Those who don't do that don't make the same money, but those who do because of market inefficiency. So I'm fine with it. It doesn't bother me. You just have to do your research and feel confident that you're involved in a great company where I'm either going to make money on a trade because the market's going to wake up on Monday or Tuesday or whatever and decide, damn, this stock should have not gone down, or not, at least not gone down so much. And then, it spikes and money market can make them nice money on a trade. Or I just hold it. I don't feel like I can lose because either the trade works or I just wait until the investment works. You see that? That's why I don't put stops in place. I don't need a stop loss. If the stock goes lower, I just want to buy more because it becomes more fundamentally attractive. It becomes less attractive as a trade because it broke the lines. And then a trader just gets out because they don't know the fundamentals. But a fundamentalist just buys more and makes more money later. That's why the traders out there are not making the same amount of money as the investors out there. If that makes sense. Go back and listen to that again. It's at 1 hour and 23 minutes of the show, what I just said. You can go back and listen to it again because it's very important. Anyways, let's go. What is your opinion on solid state transistors, which could be a bottleneck for data centers? I do not know, but because it has to do with AI, I will write it down. I generally don't do take requests when it comes to stuff like that. But I like the question. It has to do with something that I can find out. Not like some of y'all out there go, what do you think about XYZBDA ticker symbol? Dude, there's literally 10,000 US ticker symbols and like 40,000 worldwide. I'm not Jim Cramer with a freaking moo and all that stuff. No. Like, Jim Cramer does not know about every company and a professional. He's an entertainer. I'm here to entertain and educate. Transistors. All right, next question. And yes, I did just disparage a former customer of mine. I'm just calling it like it is. Very smart guy, by the way. Very smart guy, very smart investor and all that. But when you see him on CNBC, you're not getting what he is as an investor or a hedge fund manager. Since the market is so hot right now, could you see yourself going back to having a starting five? Nah, I don't know. I do what feels right to me. So don't ask me what I'm going to do in the future. Since Micron is so overvalued, would it be stupid to short it? Who said it's overvalued? I didn't say it's overvalued. I believe it's overvalued, but I would never say it's overvalued. I would say I believe it's overvalued because only God knows. Okay? And yes, I don't like shorting. Here's the thing. Write this down because you've been following me a long time, bro. Put this in your notebook. I don't like shorting companies that are fundamentally strong. There is going to be demand for Micron's products for years into the future. And until something changes dramatically in the fundamentals of that company, I will not consider shorting it. or would not. I might do it, but it will be against the rules and I will probably get roasted for it. I will probably lose money for making that stupid mistake. Okay? I don't need to play with that fire. And neither do you. Can we see IRIX, which I no longer cover? Curie, which I'm inclined to not cover any further. But look at that. I mean, that's... I still own some of the stock, by the way. But let me see. Let's see what we got here. Delete. Looks like we're at the bottom of the channel. That's what it looks like here. Okay. So from that perspective, if you're interested in Curie, Curie's interested. Curie's a little frustrating. Curie is curious because they are making those deals that are very much needed for AI hyperscalers when it comes to video content. Okay? And it just hasn't played out in the stock. So when I said I'm inclined not to follow it anymore, that was frustration kicking in because the stock's down 20%. I own some of it. Some of you guys own some of it. Luckily, I didn't make that a priority idea. Now you see why. Okay, if it was a 10, it would have been a priority idea, and it would have been a black mark on my otherwise almost perfect record over the last 2 years. But yeah, they're very much needed out there. So I'm a little perplexed. But now the valuation, the stock is at what, a 52-week low right now. So what are we talking about here? They raised their dividend, so there's that too. And that's what the chart looks like. That's what was really asked. That was the VTSI chart we already put up there before. Let's see what other questions we got. There is a very tiny ambient IoT company attending the upcoming microcap conference in Vegas. Did you look at that one when you considered which IoT company to invest in? Well, you got to tell me which one it is for me to tell you the answer to that question. So if you don't want anybody else to know about it, just send me a private email. I would be really happy to hear about another publicly held ambient IoT company for sure. So I am very interested in that. And if you got something like that, you can just go to my blog site, and at the bottom of any of my articles, there's like a comments page that you can comment on, and I'll get that from there. Or contact. There you go. Just hit the contact button. There you go. You don't want to comment on it so everybody else will see that. You put that there, that'll come only to me. All right? Do not flood you guys. Oh, never mind. Yeah, send that to me. Based on your experience, what do you think the largest bottlenecks with AI will be? Will be? It's hard to say what will be. I'm investigating that right now because we're about to go into the Vera cycle for NVIDIA, okay? And there are some things that obviously you've got optical. That's a big, but it's already unlocked. It's like people are getting ahead of things really quickly. Things are moving at the speed of light. It's so funny now, right? Back when, 3 years ago, when people were telling me that AI is a bubble and I was telling y'all it wasn't and telling y'all we're going to see movies made with AI, feature within 10 years. We're 3 years in, and now you're already seeing what did we see? There is, what did I see? It was this one right here. Ready? This right here. This video, this is a Rest in Peace DMX. This is an old DMX song, and somebody decided to make a video with DMX of this song. If you can make a full-length music video like that now, a full-length movie is just a matter, and you already saw the Brad Pitt versus Tom Cruise fight scene video. It's just a matter of stringing more of those together. All a movie is a string of video clips, right? We're there. It's happened faster than I said. And now that everybody's caught on to it, everybody's looking for what's next. And I'm trying to find out what's next too. But it's really hard because now everybody's looking for what's next. And once everybody's looking for what's next, you're playing in the wrong garden. I want to go on an Easter egg hunt where nobody else is. Not in a yard where everybody else is. Just giving y'all some common sense, right? So you can use your time effectively. What do we got here? Oh, somebody else, we got mentioned just from a purely technical standpoint. We had an engulfing candle here, and we have an internal candle here. A lot of times that leads to a breakout to the upside, whatever that means, right? So I'm just bringing that up. And you also got to remember that the Russell 2000, I think next Friday, we're going to get the preliminary list of companies that made the cut. And I do believe Watt's going to be on that list. For what it's worth, I'm not saying what that, anything, it should mean for the stock. Does their flattish quarter sequentially suggest that they might, we already answered that question. We talked about their earnings, so we talked about that. Watt guided for not needing the ATM for the rest of the year. Yes. So there was the ATM. Everybody was afraid of them using the ATM. They said, we haven't used the ATM in months. We don't need the ATM for at least the next 12 months. What's the question here? Microcap companies never like to commit like that. What's that tell you about their internal forecast for profitability this year? Nothing, to be honest, Ben, because they've got $40 million in cash. And I've only got them burning like 6 for the year. So if they burn 16, if they have a horrible year and burn 16, they still don't need to raise cash because they got like 40 million in cash. So it's just obvious that they don't need to, it's obvious they don't need to tap the ATM. They only said it, they only put it in the press release and said it on the conference call just to make it clear to people for whom it wasn't obvious, which is basically doubters. Okay? If you understand the fundamentals of this business, then you knew that they didn't need any more money. They didn't even need that much money. But when they raised extra, and I talked about why they raised extra a long time ago, and it had to do with the baby shelf rule and giving themselves better financial flexibility going forward. All right? We won't delve into that again because I like to reward people who watch the show every week so they're fully informed. I'm not going to waste their time talking about things we already talked about. Is there a U.S. company pivoting to address the memory wall? Yes. Keeping this cryptic to avoid pumping accusations. Listen, don't do that. Don't do that. There's a lot of companies addressing the memory issue. I talked about that already. What you did right there, I don't like. Okay? Being cryptic. It's so easy to figure out what you're talking about. Right? That's not, no, I don't play that. End of last year, they were talking about getting uplisted soon, and it's still the case. Could they be stalling on the uplifting to coincide with Indonesia? Yeah, that's my thinking on that. But who cares? This is not a show about trading. This is a show about fundamentals. I do talk about the trading aspects and things like that. And so, yes, I do believe that the uplisting will come in conjunction with the Indonesian award. Okay? But I don't even think about that, me personally, right? Because I'm too busy thinking about what's the risk reward. Because a trade, for me, a trade can be tens of thousands, few $100,000, whatever. That could be a trade. An investment is millions. Okay? When I invest millions and the stock goes up 3x, 10x, versus when I make a trade of tens of thousands, hundreds of thousands, and it goes up 50%. Which one would you prefer? What do we need for VTSI to prove themselves? Bookings. We need to see the bookings go up. Very simple. Bookings. How can I be doing better homework on Gatekeeper? I've been holding in... how can I be doing better? I don't know what kind of homework you're doing, so I don't know how you can do better. You know what I'm saying? Send me a message off my website asking that question. And maybe my assistant can help you with that. Just you. I invite people, if anybody but the people I've invited to send me messages, or unless you have an independent third party pick, right? I immediately delete. So it means you have wasted your time sending me the message because I'm not even going to look at it. Just so you know, because honestly, I get hundreds of messages every week. That's part of the downside of me giving to society, is that society wants to take more. I'm here to give. Carlton! Carlton, what's up, bro? You said you was watching the show. Good to see you, bro. Um, any thoughts on track or INVE? I already answered that question. Is track considered software-enabled infrastructure? How does the Wattful solution compare to track? They don't compare. We've talked about this in past shows. Hopefully you took notes on that so you understand. Track is different than infrastructure, but equally powerful, because their business is not based on selling software per se. It's because of the network effect of people being on their software platform. Okay, there's a difference. Walmart will mandate all of its suppliers to get on the ReposiTrak system. Okay, so that they can all share data on where goods are within the supply chain. Okay, that's a network effect. They're all networking. They're sharing information. And because of that, ReposiTrak has stickiness. Like, Walmart's not going to want to decide tomorrow to move everybody in their supply chain to some other solution for this. Okay? And so that makes this something that you're not going to see AI all of a sudden make it go away, because it's very difficult to take a whole network of companies and move them all en masse. Good question. A few weeks ago, you mentioned having taken a class for poker, reading people. Do you think that has helped your investing game? Yes, I talked about that, because when you can read a person, when you have a one-on-one, right? When I have one-on-ones with management, it is often, usually via Zoom, face to face, eye to eye. I would prefer live, face to face, eye to eye, more so, because I've learned how to pick up on cues, on how they are acting and reacting. And even a liar has to be well trained and actually practice a long time to avoid doing the sorts of things that I can pick up on in the split second. Not 1 second, split second. You're talking about so fast that only my subconscious can really pick it up. Okay? Where I could be around a table of poker players back in the day, and by the way somebody puts chips on the table in reaction to everybody else's move to that point, tell them pretty close to what cards are sitting in their hand. It actually, true story. I was in New York. We have a hand, bunch of bets come on the table. I'm watching these people, paying attention to what they've done. This dude comes over the top and raises. The way that he put the chips on the table, and it came to my turn, I looked at him and I was like, bro, the way you just did that, you've got 2s or 3s in your hand. I raise. Everybody else folds to this guy. And he looks at me, and I look at him. And he's like, what the? And I said, now I know you got 2s. And he's like, this is crazy. And he flipped the cards over, and it was 2s. You can train yourself for these things. The human beings are capable of incredible things, and you can learn how to do these incredible things. You just have to apply yourself to it. You are capable of anything that God has given you the ability to do. If God has given you the ability to run a world record in the 100 meters, then if you just do what it takes to unlock that ability, you will be Usain Bolt. It's as simple as that. And there's only one way to find out what your potential is, and that's to go out and find out. What would make you choose NET over Akamai? Bro, that question is too complex to answer. I have to research them both to the hilt. I need to understand these businesses inside out. I need to understand why people choose one over the other and in what quantities. And like, it's 100 hours per company of research that gets done before you guys see that thing, minimum, before you see it show up in this spreadsheet. Okay? And I try not to compromise for the names that don't show up in the spreadsheet because it's my money going in there. And it's not small money. When I make a mistake, right? Big red numbers. You know, we're talking about, like, my daily fluctuation is annual salary level for most people. You acknowledge the frothiness in the Qs. Are expecting the IWM to get caught up in it too? Yes. So if the Qs continue higher, then IWM should continue higher also. Why? Because IWM is the Russell 2000. The Russell 2000 is the small caps. And in a market that becomes frothy, small caps get pulled up for the ride. In fact, that's an area that gets really crazy, actually, towards the end. You know, if you get into a bubble and then the bubble breaks, before the bubble breaks, it's usually the small caps are the ones that absolutely go. I'll show you this right here. This is an inferior company, okay? This is an inferior player in the space, and it's up 46% today after already having risen from 2 to 20. Why? Because they're in the same space as AEHR. I know that, stupid. I investigated this company and decided that they shouldn't be bought, okay, relative to AEHR. And now it's taking off because it's in sympathy. No, they're doing good too. Yeah, they're doing good too, but is this stock worth 20? No, I don't think so. I don't think so. I guarantee you will be able to, almost guarantee that you will be able to buy this stock for a cheaper price at some time in the future because it is an inferior play in the space. But, if you find names that do what best of breed companies do, they'll likely get dragged up, right? They'll likely go up with everything else until the bubble breaks. And if the bubble breaks today or Monday, those stocks get smashed. Watch how fast the stock goes down 30% in a blink. If that happens, you won't barely be able to like make yourself a cup of coffee before you're down 30% in some of these names. How do I know? Because I went through it back here in 1999. I was buying some of those names. I was looking at a name and go, well, this is a boring company, but what they're doing is gonna get considered exciting. It's $7. I think I'll buy some. Put 1,000 shares at 7, and it went to 50. Right? Things like that. It didn't belong. I can even show you. It still exists. This company right here. Look at that. That was me. I didn't cause that. Right? I was in the industry at the time. But I was like, this company's going to probably go for the same ride every other internet stock's going for. And it took them all this time. Look, even now it's 32. I got it at 50. It's now 32. 26 years later. That's what happens to names like this, okay? In situations like this. All right, we're 1 minute from the lightning round. I wanted to give you guys, the in-depth analysis, behind-the-scenes understanding of all this stuff based on my experience and expertise. With hyperscalers like Meta signing prepayment agreements for gigawatt-scale power, and how are you valuing power options in the massive AI data energy bottleneck? I'm not getting too much into the energy names. Why? Because I don't have independent third-party industry expertise at my disposal when it comes to energy companies. I do know, and I have talked about iron, okay? Boom, look at that. Like clockwork, it hit the top of my white line and rejected down. I actually got out here at the top of this technical line, but it went all the way to the top line here. It goes to show you again, right? White lines are prelim fundamental. Those are the second most powerful lines. Most powerful lines, red and green. Second most powerful lines, white. Gray lines are technical, tertiary, third, okay? And boom. Why? because I saw the amount of power, amount of energy they have locked up under contract, and knew that what that's worth in the marketplace because I looked it up, did research on it. Okay, but as far as the other energy guys, I mean, look, that's getting picked apart too. This is the problem. We need to see a pullback to feel comfortable about some of these names because the money has just flown in. Like, you guys are coming at me now asking me about these things. Some of you, I'm not mad at it. Some of you are coming to me now asking me these questions after I've been telling you for 3 years. Okay, but now that it's obvious to everybody that AI is not a bubble, now you want to know, which company should I buy now? You should buy the company who has a time machine to put you back in time, and where you will listen to what I said and buy all these stocks before they take off. Because now they've already taken off, and you're afraid that a stock that's gone from 100 to 700 might go to 800 under your nose. Not worrying about the possibility that it could go from 700 to 300 under your nose. Think about the difference. 700 to 800 is $100. 700 to 400 is minus 300. You're trying to making 100 and risking 300 in that scenario. That's what a lot of people are doing here. And that's why people got smoked. I knew people who got broke, literally went broke in the internet bubble. I got rich. They went broke. How? Simple. They doubled down at the top and rode it all the way down. I got out at the top and went short all the way down. It's a big difference. We are now in the lightning round. For those of you wondering what that means if you don't ask your question early, you get the short answer from me, because we end the show at about 3:55 so I can go spend time with my lovely wife and daughter. Get this weekend started. Is Gatekeeper riding on all cylinders? No. Is the momentum gone? No. I see it as a sequential, reaffirm, higher quality business. Yes, margins will improve, higher quality business will come in, is my belief at this point in time. I didn't ask, like, if you love what I do, give me the thumbs up. I didn't ask for it this week. I'm not going to ask for it. Some people say 300 people watching and only 163 thumbs ups. Hit that thumbs up. Yeah, thanks. IDN chart, please. There you go. I mean, I told y'all to get out. I mean, what more can I tell you? Do you think your narrative lines on the company stands, or has competition dulled the niche impact? I mean, the lines are what they are still, and the stock's still operating within those lines. And what you're seeing in this chart is indicative of what we've seen and what I warned you about. IDN, in at 420, out at 660, 57% return in 6 months. That's about 140% annualized. Beautiful. Those who stuck around are now in the red, below the 420. And now need a joint to feel better about not following the rules. KRMD chart, please. Not yelling at you who asked the question. I'm just saying. I always address the crowd. What is your opinion? We already talked about solid states transformers as a bottleneck. It's a problem, but everybody knows the problem. This is the thing. The question that you asked about solid state transformers is known in the marketplace by MBAs, Harvard and Wharton MBAs on Wall Street. People have put millions of dollars of research into this. That means you are at a disadvantage. It means I'm at a disadvantage. So for me personally, I might look into it to see if there's a niche play, something somebody missed, maybe. But in general, it's not worth your time because everybody has already looked all over the place. You got 2 gardens of Easter eggs. One, everybody's already looked through it. The other one, nobody's looked through it. Which one do you want to go to look for Easter eggs? There might still be one hiding under a rock in the yard where everybody else has already been. Does that mean you want to be there? Careful what you do with your time, because time is money. The most simple sayings, right? All things in moderation. Time is money. Nobody pays attention to them. They're the most powerful things they are. Time is money. You waste your time, you are wasting your future money. Your ability to become a future millionaire or make another million is largely dependent, highly dependent on how you use your time. The less effectively you use your time, the longer it will take for you, your dreams to come true. And last time I checked, you and me want our dreams to come true as quickly as possible. Stop wasting time. I'm holding Curie, which got smoked. Future's still bright, so is dipping in at these lower levels a smart move? We already talked about that. And I don't tell people what's a smart move or not with the stocks, especially not on command. I said the rules, the primary rules, especially in a yellow alert, focus on the names in the priority list because they've been vetted the best. I'm going to give you all my information. I'm not trying to deflect from the fact that I have a positive, well, obviously I own the stock, right? But it's been wrong. It's been like, I think that's been my worst, it's the worst performing stock in my portfolio. And that should tell you something. Should also tell you something that it's obviously not one of my largest positions because it's not one of my priority ideas. It's not one of my 10s. You play around with sub-perfect equipment, you can get electrocuted. And that's not to say that it was your fault, right? It just goes to show you, to reinforce, be picky, picky, picky. If I could, I would have AI filter out this show and only talk about the stuff that I really think you guys should focus in on. We do 2 hours here. I could do this whole show could be 20 minutes. But then you wouldn't get all my information, and the massive has spoken. You want all my information, so I'm giving it to you, but I want you all to be careful. Any more questions? Why isn't Gatekeeper on all cylinders? Why isn't Gatekeeper on all cylinders? Because they're not. Like what specifically? Let's see. We need to see those relationships ramp up high. I mean, they're doing well. You asked if they're on all cylinders, right? I want to see more orders. I want to see the momentum. They were on all cylinders last year. Remember? Right here in this time frame when they were signing deal after deal. I mean, like almost every week I was coming out and telling you about another deal. And now it's like every few weeks we have a small deal. Not every week getting a big deal. So how can they be on all cylinders? And this, you could answer the question yourself. And just because this is the last question, I'm going to give you a little extra just so you can understand the logic. You could answer this question yourself very, very easily, my friend, by simply saying to yourself, do I remember when this company was operating on the most cylinders possible, which is 10? We might joke about 11, right? But that's a Spinal Tap reference. You can ask AI what 11 and Spinal Tap means if you care. But what we do know is they were like going absolutely bananas right here last year. You remember that. If you remember that, now say to yourself, are they on the same sort of bananas as they were this time last year? If the answer is no, then obviously they're not operating on the same number of cylinders as they were before. So if this was all cylinders, then this is not all cylinders. And that's your why. And that's your show. All right, y'all. I hope you enjoyed this as always. The only thing I ask ever is to just share the fact that I'm here. A 30-year veteran of Wall Street who retired in 2008. Yes, 18 years ago, I retired. And since that time, I've been sharing my information for free. I used to charge $3,000 an hour for my consultations. Now I come and do it for free with y'all. No sponsorships, no advertisements. If you're getting advertisements, it's because you don't get YouTube Premium. It ain't, none of that goes in my pocket. I don't accept any money from anybody for anything since 2015. Okay? I don't accept money from anybody for anything since 2015. So you know there's no sponsorships, no advertisements, no this, no that, no subscriptions, no nothing. Just me coming here to tell you what's real so you don't get tricked by the 10,000 clowns on Twitter, the 10,000 clowns on StockTwits, the 10,000 clowns on CNBC, and that, I'm sorry to be disrespectful, the 10,000 clown professors out there in colleges trying to convince you that they're teaching you how to become a millionaire. Because I came out of Northeastern University, looked them up, just about a top 50 college in the country, and lost money for 3 straight years out of college before somebody took me under their wing and told me the real. Just like I'm here to tell you all the real every Friday with Money Mark, Stock Talk Live. Have a great weekend. We out. Turn out the lights. Turn out the lights. Let's see what we got on the stock market. We got a couple minutes left here. We got to take the baby to the park. Got to take the wife to the track. Got to get some exercise. Market's getting smushed. How's my portfolio doing today? We getting smushed? Nope. We're not getting smushed. We're not up. Are we up? Pretty. The hedges are doing their job. The hedges are doing. We're not down much. We're not down much today.